Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Wednesday, 14 January, London Open Prep. Two themes stand out: the U.S. growth pulse with retail sales and producer prices set to guide the dollar, and a powerful cross-current in Asia where Japan's guidance collides with a weakening yen, while China posts record trade and oil import figures. Starting in the U.S., November retail sales arrived today after a delay, with a modest pickup expected, a marker for fourth-quarter growth. The dollar index is steady after regaining some ground, and with consumer prices broadly in line, producer prices later today will help refine the inflation and policy path narrative. For traders, that matters. Meanwhile, in Japan, Governor Ueda reiterated the Bank of Japan's intent to lift rates if the economy, prices, and wages evolve as forecast. Even so, the yen continues to underperform and dollar-yen is pressing toward a big round level, a sign that political uncertainty and yield moves are outweighing the policy signal for now. Markets are sensitive to any official messaging on currency stability, and they're watching closely. Over in China, trade data surprised to the upside, driving the annual surplus to a record even as exports to the U.S. fell sharply, suggesting Beijing found support in other markets. Energy adds another layer, with oil imports hitting an all-time high last year, challenging the idea of a structural demand slide and offering a tailwind to crude sentiment. On the corporate side, Saks Global filed for bankruptcy protection after last year's luxury retail consolidation, one of the biggest retail failures since the pandemic. Stores are set to remain open for now under new financing and leadership, but it's a cautionary note for U.S. high-end retail. In Europe, equities are pointing to a mixed open, with attention drifting to U.S.-Danish talks over Greenland and ongoing debates around tech rules and sanctions, underscoring the strategic and regulatory backdrop. Turning to markets, precious metals are in focus, gold pushing to fresh record highs on safe haven demand and growing bets on U.S. rate cuts, with silver rallying alongside. The dollar is broadly steady ahead of data, edging firmer against the Swiss franc, while euro-dollar is drifting with fading momentum. Yen weakness remains the standout theme, and the Indian rupee is firmer after positive U.S.-India trade talks. Oil tone is supported by China's import strength. Looking ahead, it's all about the U.S. data slate, retail sales and producer prices offering a clearer read on growth and disinflation. Europe's calendar looks quieter, so headlines around Greenland talks and the tech policy debate may fill the gaps. I'll be watching dollar-yen for signs the uptrend extends toward that psychological line as yen underperformance persists, and gold against the dollar, where the trend remains higher on the policy and safety mix. I'm also watching euro-dollar for a gentle downtrend if U.S. data supports the greenback. Dollar-rupee skewed lower if trade tailwinds continue for India, and crude with an upward bias on China's demand signal. The takeaway: the growth-inflation balance is steadying, but currency and commodity moves say positioning is still cautious, optimistic, but fragile.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.